Check one. Check two. Check. Everyone, welcome aboard to a new session of charting across the board. Only checking some technicals in the background after 2 weeks or more. Welcome aboard, traders. Once again, this is Marble 6 to a new session of charting across the board after a long break from the live stream because it's getting a little boring, to be fair. Boring in a sense that human psychology never changes. Market participants always trying to portray themselves as winners, being right, most of the time wrong. However, this game is getting old, and what we like to do here is present arguments for execution. We're talking with one of the members that what matters ultimately in this game is not about being right or wrong or making projection, forecasting the market, what's going to happen next in 2 years, in 5 years. No, my friends. Trading is about building the equity curve that we all love, to see the green for capital growth, not only preservation, but also building in a consistently manner. I wanted to start with a chart or this website on swimming with the whales. By the way, Binance continues to be the largest whale in the space, in the crypto space. Therefore, I would like to bring some charts as to what is currently occurring in the price action for BTC. If you guys recall, we're looking back in July, at the beginning of July, a divergence on the weekly, where we started calling for a negative divergence class A on the weekly time frame. Therefore, there has been indeed signs for a weakening trend. The trend that has been upwards was suggesting that a shift in sequence of those higher lows, at least in the short-term trend, starting on the daily, was about to change, to shift. What occurred indeed, we experienced a major liquidation event back in October, also following our readings from the major cycles, the sun waves for the October readings. Now, as we move from October, the next month, I'm already looking ahead into March 2026. Why? Because if we are going to experience another correction, this correction or this downward pressure may last up until December and January, okay? Therefore, I'm looking around March, April for another key turning point in the market, okay? I know some others are trying to look at the moon, trying to decipher where the turning points may occur. And also, this is why also the readings are getting old and boring, in my personal opinion. Why? Because many are trying to, of course, make calls, but what occurs is the markets keep dropping and dropping and dropping. Making calls at 150K, at 116,000 is not the same as making calls here, okay? Or neither making calls at 80K around these levels at 109 is not the same as making here, correct? Why? Because those shift market trends are significant when it comes to trading. We cannot disregard 15, 20, or 30% move when it comes to trading. These moves are massive, okay? Therefore, each moment in time is different, my friends, okay? Each moment in time is different. I know we like to make projections. We do know that there is a pending major cipher on the weekly or the monthly, weekly and monthly, I believe. Therefore, we already know those levels towards the downside. Okay, there's nothing new under the sun, okay, unless you're looking at the moon trying to identify when the markets will turn, correct? All right. So recently, you guys already know the deal here. There was a major divergence on the weekly. We go here briefly into the major readings. Why? Because the whales clearly are moving into primary trends. The major moves often occur on weekly and monthly time frame. In the same manner that the lows at 15K was identified, another divergence. Because remember, lower lows in the price action and higher lows in both momentum indicators, among other readings. The spring from Wyckoff, among other information, was a key turning point for this major upward traction. It started in October and early 2023, okay? Along the wave, of course, many trade setups are developing, therefore we take what we see. But we never pretend to know what's going to happen next in the market. That's not trading, my friends. It never is, never was, and never will be. Okay, show us your execution and we will have a different conversation. Anyways, here the variables on Bitcoin, okay, that was already developed back in July. We mentioned these levels was something to monitor carefully, to address the positions carefully. We did indeed take or took some shorts in between, longs in between, but the overall reading, the overall bias was that a shift in trend was about to occur. Okay. On the weekly, clearly, we're still within an uptrending market. However, it's very important to know when this major shift may occur that many cannot identify. We keep calling, or some of them keep calling 150, right, at 124, and then the market drops 30, 40%. That changes the perspective, changes everything, okay? That's not trading. And this is why my point is that these streams of time are getting a little boring. Why? Because nobody really care, right, unless you're trading. Therefore, I am focusing more into the community that we already built, that are traders who care about the price action, not what the moon or the sun or the planets, without any offense, okay? What those alignments in planets may occur or may tell us, okay? Not trying to offend anyone, but execution and market operations, as Gann also suggested before, okay? I got a friend also in the room who is a Gann trader. We respect them all, but overall execution is what really matters in this game. Okay, so we got a higher high in the price action, lower highs in the momentum indicator, of course, presenting a decline or a reading for a weakening in momentum from the upward traction. Okay. There are concerning points on the daily time frame. Why? Because we're now within, again, short-term trend on the daily. This is also another important point to make. We're in a downtrending market, my friends. Clearly, we have been in a downtrending market since August or July, okay? After the readings from 124, a decline, some upward traction, and so on. But shift in sequence have now changed after also piercing below the previous low, a 101, the previous decline from October, okay? Now, of course, there is a pattern between a butterfly that we're looking in the room. All of these are presented. And to start with the chart, there was, prior to this move, also during the stream, the previous stream, I mentioned that it will be important to identify those W formations, okay, after that major decline. We presented a short execution based on a bearish butterfly. Hold me 1 second here. This doesn't mean that we held the entire position to the lows, but it was important to, of course, take profits along the way. Normally, we compute the common areas of retracement from the leg C to the D. Okay, if it goes lower, of course, we apply trails and stops if prices move back to the highs. Therefore, we were looking this one in October 21st, okay? We indeed presented a decline towards the deepest levels of retracement, another bounce. I was already out of the positions and now in no positions. Even of these recent bounce that we have, besides identifying that a pending back then from the bearish butterfly, we're looking for this decline for a pending bullish deep crab. This is another important point why making projections or predictions doesn't really matter. Why? Because the markets always changes and we identify new readings, new data sets in the price action to act upon the new information within the daily and 4 hour. Okay, even though the macro has not changed, there are opportunities in between to execute upon them. Okay, therefore, original idea was from a bearish Gartley to a bullish deep crab towards 93,000 regions. However, new data sets present themselves. Therefore, we identify that the key levels where Bitcoin was holding was 107. Everybody knows this. Now, previous structure support will become a key structure resistance. Okay? We mentioned in our room on October 30th that if this previous support was weakening, which it was, but also breaking below the hard line of this pitchforks channel, we were likely going to test near the pivot lows from June within the 98,000 region. Of course, this point or this level was a little lower, 98,240. We went to 99,800 in some exchanges. But the point here is that those participants who are making projections to 150 at these highs or a 116 are constantly changing their bias. And this is not new to us, right? We have seen this in the space since 2021 almost. So therefore, I hope really that if you are listening to any influencer in the space, that you are tuning out of the noise and start paying attention to mother market. Why? Because mother market will often teach us an expensive lesson. Always. Therefore, key level for BTC to break now to recapture is 107. Okay? If we look at basic market structure, 107, 108 was previous structure support. Now we pierce through a $10,000 move below those levels are now becoming resistance. I mentioned before that the idea from the Gartley we're looking was a pending deep crab pattern. Of course, the shape and the symmetry changes here. Therefore, we adapt to new information. We compute the lows to the highs, back to the lows. Bingo. Eureka. A new information. B point. Okay, careful here. What may this pattern be? A butterfly. Okay? Pending butterfly, also presented in the room as time progresses. Where did Bitcoin go yesterday? To the PRC between the legs 1.72 and 1.41. We're not looking at the moon. We're not looking at any other readings trying to understand or constantly change our bias, flip-flopping our market readings. We make one or two adjustments, and therefore we remain consistent in our readings, okay? Let me show you why, my friends. Making a projection to 150 at these highs, 116, a resistance, is not the same now to these levels, 15% correction, okay? We had a guess back in January of 2024, I believe, or early this year. Amazed how fast the time goes. Therefore, I'm trying to compute those time frames. We got a guess, making projection to higher levels would occur after 32% decline in the market. However, the projections, the goalpost, keeps being postponed over and over and over. And another reason why doing these streams are getting a little boring, in a sense that the market, despite the information that the market present, participants don't really care, okay? They like to listen to what sounds good to them, the bias, the interpretation of market information, or per se the wrong interpretation that is there's plenty in the space, and therefore human psychology will never change. This is why the markets, also those competing forces between buyers and sellers, are trying to outsmart each other constantly. That will never change. It hasn't changed over hundreds of years and will likely not change anytime soon. Therefore, that can be a big advantage for us, right? The proper identification of these M&Ws or any geometrical pattern from the legends of the past may be useful to us who respect them. Okay? We don't care about being right or wrong. Rather, present the information that we observe in the chart, identify those lower risk areas, and execute the trade and build consistency overall. That is what trading, my friends. That is what, or that is where profitable traders are being built, by trading the market. Okay? There are new readings in the price action. Of course, we have now a reactive move from what was a pending information with deep completion point at the 1.72 or between the 1.272 and the 1.41. Prices weren't indeed within that range. There are two PRCs, okay? Don't get me wrong here. There are two pending PRCs, two pending ratios for the 1.41 and the 1.618. That should be also carefully addressed in the event of a breather, in this case, of the 1.72 or the selling pressure. There's always a breather before a continuation towards the downside, okay? Of course, if there is a type 1 or type 2 return of an information, we then identify new readings. Type 2 return when the shift in sequence changes, even in hourly for this information that is based on the 4-hour. Therefore, if there is a new higher low after this reactive move, potentially as a type 2 return, then that can be an argument for, okay, there might be a pause, we may start reversing. But as of now, there is no indication that the selling pressure will stop, okay? There are levels by levels, my friends, even though the macro has not changed. If you have been watching us, even from July or May even, we presented all the readings that are pretty much developing or has been materializing since then. Divergences on the weekly ended up into a major decline, even though we printed a new all-time high, slightly all-time high from the previous high from 124 to 126. No major changes on the macro. The downtrend or the levels of weakness were there. In July, the same post, the same thumbnail correspond from that previous stream, swimming with the whales. Reason why I was looking at the activity on Binance. Why? Because they continue to be the largest whale in this space, okay? Or the largest holders in this space. Besides BlackRock or Strategy also, that was presenting a pending information. Going briefly here on the S&P 500, the same arguments, pattern identification. There was a butterfly from our previous post. You guys remember the butterfly effect was pretty much the same to this outcome. Another W formation. We mentioned that something small may trigger something larger of a bigger magnitude. Therefore, we got three targets as a setup here on the S&P 500. We then reach the target 2. If you guys can hear that alert, that represents a whale. I'm looking here on the 15-minute time frame for a pending W formation. Why? Because I mentioned that I've been taking trades within the daily time frames. From time to time, not all the time, but from time to time, I do take some trades here and there. Why? To build as much capital as I can for 2026. Why 2026? You guys remember periods of risk, 2025 and 2026. On Bitcoin, we're now at 103. Where were we last year? We haven't made any change the entire 2025, my friends. No major changes. However, the periods of risk remain there. And we're now heading into 2026, where I do believe there's going to be a major shift in trend from the upward traction or from the bull market shifting towards the bear market. Why? Because the cycles repeat over and over. There's no science or no rocket science behind these ratings. However, a proper interpretation is crucial when it comes to trading, okay? I'm going to end the stream here with a brief note that the chart on the price action for Bitcoin could also be easily interpreted as a measured move. Okay, we have the highs to the lows, an upward traction. What comes next? Oh, magic rocket science, a measured move. So therefore, let's pay attention to what occurred at these levels. Now, 107 become a key level of resistance. It was previously regarded as support. We remain above for too long. Okay, since pretty much July, August, September, October, and now we nuke towards the downside when the expectation, among others, was 150. Okay, the market always find a way to teach us a lesson. Everyone, I hope this is very clear. Focus on what the market is telling you without listening to the noise. If you're listening to the noise, tune out the noise and focus on the price action mainly. Okay? Why? You guys know why. Okay? For everyone, I'll see you guys on the next one. Again, before ending the stream, we're now clearly in a downtrending market. This is where the pitchfork channel comes into place, where we identify the key turning points, the highs to the lows to the highs. We have now a downtrending market where we have the inner trend line of this channel for the inner trend line of support. Of course, the hard line, the inner line becomes resistance. As Andrew Pitchfork would suggest that his friend was only capitalizing and make millions trading the action-reaction rule. Simple as that. Okay? If you want to look at the moon tonight, let me know. If you see any witch, I'll see you guys on the next one. And remember to live a life with an attitude of gratitude. Cheers. To now the noise.